Now let's bring in Dan Ives. He's partner at the new firm, Yorkville Ives. It's good to have you back.
Great to be here.
Get to the new firm in a minute because that's news in and of itself. But we have to talk to you about this because remember, before you left your prior job, you had just initiated on SpaceX and you were one of many bullish analysts on that stock. But why no analyst bump, as Leslie was just talking about?
Yeah, I think when you look at SpaceX, and obviously have some important launches coming up, I think the most important thing is investors, the longer term ones, they're gonna view these as speed bumps because you got to ultimately look at this is a story, and we talked about it. It's an AI data story. Space more and more is going to be a huge part of the AI revolution. My view in covering tech for decades, if you look at the Facebook or the IPO, what it did, you look at Amazon, it's very easy to get very short-sighted. This is a 26-mile marathon. I think we're only in mile 1 or 2.
Yeah, I hear you. I mean, and a lot of the commentaries around that, but the fact remains, it's hard to value. And at its core, that's one of the issues. Yes. Normally, you look at companies and you can look at all the different metrics and come out with the price that you think it should be trading at, right? The valuation relative to its earnings. But this one's different.
Sure.
It's hard.
Look, the companies like this, they're not going to have quote-unquote valuation support. And I think that's part of the problem. When you get into these, it starts to have a cascade effect. But as we've talked about, whether it's SpaceX, whether it's Tesla, whether so many of the transformational tech stocks, you have to be able, forest for the trees, to look out the next 3-5 years. And when you think about the fourth industrial revolution, where we are, it's hard to say that without SpaceX in the sentence.
What do you make of what continues to go on with chips and then what the mega caps are doing in terms of their trade today and over the past month? I mean, they've certainly woken up. Yeah. But chips remain really, really hard to figure out.
I think it goes back to SK, memory. Those are the golden childs of this AI trade. You've seen massive sell-off since really SK, went public. But then on the other side, look at where NVIDIA and so many of these other chip names are. It comes down to 2Q earnings. I mean, that's really going to be the flashlight in the dark tunnel. We've talked about it. 15-to-1 demand to supply. This AI revolution is still third inning, but the hyperscalers, those are the ones that are funding the AI part, funding the CapEx. Those are actually the ones that are mostly in the penalty box. That's why it's so important for Alphabet, for Microsoft, for Amazon. As we go into what's really just, I think, a fork in the road earnings season. But I continue to view it, the demand story, it's still early.
I want to talk to you about a number of those names. Let's go Alphabet. Because it's so timely given what Warren Buffett said. Hey, this was my pick. And he thinks they're going to be a winner. What'd you make of that?
Look, Buffett has talked about it. The valuation, you look at Alphabet, a year ago, New York City cab driver was bearish on. And now, as it plays out in terms of what they're doing on search, what they're doing on cloud, some of the parts, for those like a Buffett or a Berkshire looking for, okay, what are valuation names that you could rationalize in AI? You go back to SpaceX and some of the others, maybe on the other side of the spectrum. This is a perfect example. That fits well in, and they are at the epicenter of the build out, and especially when it comes on search.